Bitcoin just broke out, but here's the problem. It's smashing straight into critical resistance. FOMO is everywhere. But here's the real question. Can it keep running if the stock market breaks down? Or is it just another bull trap? Let's take a look. 6,000 points, 6% in one day. Decisive breakout. What's next for Bitcoin? Okay, so when we're looking at this chart, let's talk about this previous overhead resistance. As whenever a move approaches previous highs, it at least often offers a reaction there, and so therefore we're trading right into a resistance level. There's a big now emotional impulse for all investors to want to FOMO in, which is the fear of missing out causes them to buy at any price. But there is not much asymmetry at this entry. Now, the other big thing to ask is that at least throughout the early part of the year, my thesis has been that Bitcoin is a securitized risk asset now, and therefore with all the ETFs, leverage and margin and futures and options and all the different things that are available on this, that it's susceptible that when there's a liquidity event in the broader stock markets, that Bitcoin succumbs to that selling. And so we have a scenario where I'm pretty bearish on the stock market at this moment. And so the puzzle to solve is, can Bitcoin decouple and march a beat of its own drum, kind of what gold has been doing? Can we have a bull run here on the upside where this thing can, let's say, make the next bull move, even if the stock market isn't on there? And more importantly, can it hold its gains if the stock market turns? Those are the kind of little things that I'm not totally certain about. But what I am certain about are some of these technicals here. So we are approaching previous highs. Now, it's not a tactical moment to do a brand new buy. Like a short-term measured move like this on the upside measures up to that 106, 107,000. And so this is a level where those previous highs will act as resistance. If I was to give you an analog of how it plays out, it'll go a little bit higher and it will pause here. I'm into buying dips. And so this, if we have a pause and a retracement that comes down into a buy zone, that would be a tactical place to do some short-term buying if your bias is that there's going to be a breakout to new highs. So if this thing does turn bullish and it remains bullish in spite of correlation to markets at this point, what are some realistic upside targets? I want to take a look at the weekly chart. And so what I have here is a 50-week moving average on top of Bitcoin on a line chart. And now you can see here we're trading right back up to those previous highs. Now you can observe that each time this market is dipped on a weekly basis down to that 50-week moving average, down to what are Fibonacci zones, such as this 50% retracement line on the Fib zones, was generally where the lows would come in. And so now with this breakout, if this does manage to break to all-time highs, which is entirely plausible, and if that does, then what is a realistic upside target? Well, your measured move is up to about 125 to 130,000 on the upside. Now, has it broken to an all-time high yet? No, but that's definitely what you should be targeting if it does break to an all-time high. So what are we watching? It's probably going to bump its head along the previous highs. It might give a little bit back. That if those of you that want to position more bullish on that can buy those dips, and you got to see a breakout to 52-week highs. You've got to also see that when the stock market is weak, whether Bitcoin can decouple from that correlation and march to the beat of its own drum. If those things are happening and a breakout to 52-week highs, your target is 125 to 130,000 on the upside. Good trading, everyone. If you've been enjoying this kind of insight and want to see exactly how I'm positioning, head over to bigpicturetrading.com. You can start a 14-day trial with no credit card required. You'll get full access to the research, the trade setups, and most importantly, you'll see what we're doing in the markets right now. It's free to try, easy to cancel, no pressure. Just come check out and see if it helps you trading.